In this video, we'll be taking a look at a few chart analyses to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade Forex professional, check out our complete Forex trading course on Udemy. I promise you that course is going to help you a lot. I have the link in the description below as well. So we're going to, try as much as possible to go as fast as we can today, because I don't want to spend more than 15 minutes on this video to quickly show you what I'll be watching out for, on markets this coming week. So on my chart here, this is a gold chart on the 4 hours time frame, and as you can see, we've had a very good consolidation around these price levels, which gives rise to an ascending triangle. Right, you can see a higher lows, 1, 2, 3. So we have 3 to 4 higher lows with a clear area of resistance, and we had a solid bullish breakout on Friday. So this is something I talked about last week, but instead of using a clear resistance, I drew a trend line like this, right? But the point is, we anticipated a consolidation. So we anticipated, price going into this area of value, consolidating, and then giving us a bullish breakout. But the consolidation took longer than I expected, which is the reason why we had this pullback to the downside before we eventually took out the resistance level. So remember, I trade breakouts, and this was a clear indication of a bullish trade opportunity, and I jumped in. So I jumped in at the break of this resistance level, giving rise to the move to the upside, right? So on the 4 hours chart, you can see we clearly closed, on the 4 hours chart, you can see we clearly closed above the area of resistance, and my take profit is around $2,600 per ounce of gold. So that will give rise to another 9,300 pips, so approximately 930 pips our price movement. So this is my price target. So how did I come up with that price target? So I came up with that price target by taking a measured move off the ascending triangle. So you take the resistance to the trend line and you measure it from the breakout, so then you get this. So ideally, we should expect gold to get as high as 2,620 or so, but I'm taking a conservative price target of 2,600 for my take profit target. So I'm in with a good position, right? A position size. So I'm going to scale up my positions as we go higher. So I'm not going to hold all of my positions to get here. So we'll move 500 pips. I'm going to close some of my positions, 200 pips, close some till we finally get to this price target, if we do get that, get there, right? So if you currently not in this trade, I would advise waiting for a good consolidation before jumping in, or at least a retest. In my opinion, I don't think we're going to get a retest, right? Because I think this market is going to move violently. So two possible scenarios is market opens, we get a small pop to the upside, and then we get a grind to the downside, retesting this area of value, and then before kicking back up. So when we retest this area of value and get a good bounce, that should be your confirmation to go long. That's one case scenario, right? So another case scenario is waiting for price to go up a little. They're giving us a bullish continuation pattern followed by a bullish breakout. So this could be another good opportunity to go long if this happens. So these are the two case scenarios for going long on gold, in my opinion. Right now, we're currently trading at an all-time highs, price discoveries. So it is, very difficult to tell what's going to happen in the market. But these two case studies, or these two scenarios, are what I'll be watching out for to go long. You dare not try to short this market right now. Don't go short. That's my recommended advice. Don't go short. There's no reason for you to go short. All you should do right now is look for opportunities to go long. And going on to the 1 hour time frame, since that's where most of you will be taking your entries from, I'm going to repeat once more, right? So the two best case scenario right now is either waiting for a retest of this area of value, followed by a bounce to the upside, then you look for opportunity to go long, or you wait for a consolidation around these price levels and a break to the upside. So this will give you some sort of a bullish continuation pattern. It could be an ascending triangle, it could be a symmetrical triangle, it could be a flag, it could be a ranging channel. As far as we do get a bullish breakout from that consolidation, then that could be your confirmation to go long. But unfortunately, one other case story that could play out is price simply just going all the way up without giving you an opportunity to go long. Then you must have missed this trade already. So this is a very, very good possibility. And I just want you to pay attention and don't jump into trades, because if you should jump into a trade right now at these price levels, it means your stop loss would have to be around these lows, because this is the best possible significant low we had before the move to the upside. So if you jump into a buy trade here, your best chance for a stop loss should be around these lows, or when we take out this trend line, which would be just too much of a risk for you to take right now. So that's why if you wait for a retest and you wait for a good bounce, then if you go long after the bounce, your stop loss could easily be below the consolidation or below the retest, right, while you ride your trade higher. While for a a bullish continuation pattern, as I talked about earlier, so something like this, while for this, if this happens, then your entry could easily be around the breakout and your stop loss could easily be around underneath the consolidation, at least to the breakout. So this is the reason I wait for confirmations and consolidations, because they help us mitigate risk by giving us tighter stop losses. So this, I'm going to trade gold. Nothing much to see here other than the fact that we may significantly push higher even without getting a consolidation or a retest, because I think gold is going to move aggressively over the next few days or weeks. So that's something to keep in mind. Moving on, we're talking about US 100. So this Nasdaq, very good chart on the 4 hours time frame. You can see we had multiple bounces of this trend line. So 1, 2, 3. So 3 significant bounces of this trend line, and we've seen price recover a little since we had this dump. So zooming in over these price levels. So before here, you can see we also took out this trend line. So after we bounced off of these lows, we had multiple retests of this trend line. We took it out, retested, and moved to the upside. Now we're trading around this area of resistance, or support turned resistance, area of value, however you want to call it. So two case studies. There's a possibility of a bullish trade opportunity here, and also a possibility of a bearish trade opportunity. So I'm going to go down to the 1 hour time frame to help you understand what I'm talking about, right? So I know there seem to be too many lines on my chart, but it's just to help you understand the price levels I'm watching out. So you can see this dotted line I have over here is my price alert for a bullish trade opportunity when we get a bullish breakout. So first case study is waiting for a bullish breakout. So we go bullish. If we get a bullish breakout, I'm going to jump right in aggressively, right? If we do get a bullish breakout, I'm going to jump in aggressively. My stop loss is going to be underneath these lows, and first take profit target obviously is going to be around these highs. I'll be taking very little, profit off the table at those price levels. Then my next take profit target is going to be around these highs. So this would be approximately, let's see, 1,000 pips price target, which would be a decent profit for the week if this happens. So this is my bullish case opportunity, bullish case scenario, excuse me. I'm simply going to wait for market to open, get a small move sideways, and then a bullish breakout. If we get a bullish breakout taking out this high, it means we violated this area of value. So I'm going to go long, setting my stop loss around these lows. So that would be around 260 to 250 pips stop loss. So let's see. So around 280 pips stop loss, which is a no-brainer for me because your price target is around 1,000 pips. So the risk to reward ratio is what it has, around 1:4, 1:3, as the case may be. Right, so that's my bullish case scenario. And for my bearish case scenario, I'm simply going to wait to see what price does, coming back down and taking out this trend line. So if we take out this trend line, for example, and take out these lows, then around this price level is going to be my entry. So my entry is going to be around this price levels. So after the breakout, also taking out these lows, where I'm going to initially put my stop loss if we go long. This is where my entry is going to be for shorts, and my stop loss is going to be above the resistance level. And my take profit target is going to be around this area of value over here, right? Possibly for a retest of this trend line over here. So it could mean, coming down all the way to this trend line. So hitting the trend line, also hitting the area of value before we maybe possibly go higher. So these are my two best case scenario for Nasdaq, right? So bullish and bearish case scenario. Mind you, we may get fake outs. That's not out of the question. So we may get a pop to the upside where you get into the trade and then you see price coming downwards. So this is a fake out and a possibility, and the only way to mitigate something like this, if you're going to aggressively, is simply to use minimum risk to get into this trade, right? If you're not too sure of the trade, if you're not confident enough, and you feel there's a chance of a breakout, then go in with a very small position in case we get a fake out indeed. then you lose a little bit of money. And if we do get a breakout from this lows, then you get an opportunity to go short instead. So I know most people will tend to look for opportunities that would help you avoid, trading fake outs. But over the years, I've learned something about trading the market, right? Instead of avoiding or trying to avoid fake outs, you should focus more on your risk management, because I can tell you of a fact, of a truth, that you would encounter fake outs most of the time, right? You can't avoid all the fake outs in the world. Even if someone tells you wait for a retest, wait for a consolidation, and blah 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 blah, fake outs will still happen if they want to happen, and you fall for them. So the best possible way to trade fake outs is, using strict risk management principles. So that's what's going to save you. So even if you fall for the fake outs, you are not scared, because you know you are safeguarded by your risk management. So I think that's a better and a realistic way to approach the market, instead of looking for ways or strategies to avoid fake outs overall, right? I know there are a few ways to avoid fake outs, like watching out for divergences, waiting for retest, but those things do not work all the time. And when they don't work, you feel like you did something wrong or your strategy is bad. So that's not the case, right? So instead of trying to avoid fake outs, focus more on risk management that will help you mitigate the risk if you indeed fall for fake outs, and strategize your trade in a way that you can also take advantage of the opposite side of the situation if the fake out happens. So if this turns out to be a fake out and you're in with a very low risk, right? Low risk, it hits your stop loss, then you have an opportunity to go short over here, because then the fake out would have confirmed the bearish breakout. Meanwhile, there could be two fake outs like this. It doesn't matter. So if you have a good risk management, then you shouldn't have anything to worry at all. So that's it briefly for Nasdaq. Moving on, we're going to talk about EUR-USD. I know I've been on hold on crypto currency, on trading currency pairs for a while now, but I think this is looking really interesting. I am going to go long on EUR-USD immediately the market opens, right? I don't really care about the stop loss, because stop loss is just approximately 150 pips. So this is a 4-hour time frame on EUR-USD. If you take a measured move from here down to this price level, so this is where my stop loss is going to be, that's 150 pips. My target is going to be around this price level, which is 250 pips. So more than a 1-to-1 ratio in my opinion, and it's good for me based on my risk management strategies, right? So that's the reason I'm going to be jumping into this trade for EUR-USD, because taking a look at the charts from a broader sense of view, you know for a fact that this trade has broken out from this symmetrical triangle. We've retested, and there's a good chance we are likely going to head higher now. There's also a good chance we fall lower, because currency pairs can be so fucking crazy sometimes. Please excuse me, don't mind my language. We could go down, right? So that's where risk management comes in. So for me, I'm comfortable with 150 pips. So even if you're comfortable with 150 pips, what happens is you then decide a lot size in which you're going to take this trade with. But 0.01 lot size means you're losing $15 only. So one lot means you are losing $1,500, and 0.1 lot means you are losing $150. So if you're okay with any of these categories, you jump into the trade. If you are confident enough, set your stop loss appropriately and ride the trade as we go higher. Some traders would likely put their stop loss around these lows. In my opinion, price could easily reverse back to this area of value, taking out your stop loss before going higher. So that's the reason why I have decided to make my stop loss all the way at these lows. So I don't think there's anything much to see here, because we've had the breakout, we've had the retest, move to the upside, and that retest, and now we seem to be moving higher, right? So in my opinion, this is a very good trade opportunity, and I'm going to be going long when the market opens. Entry is going to be around these price levels. Entry is going to be around the current price level. Stop loss is going to be around these lows, and take profit target is going to be around our highs. I am not going to take any profits around these highs. Why? Because this is simply going to be 100 pips, and that's no good for me. So what I'll do is I'll probably adjust my stop loss to entry to safeguard my trade, and see if price moves higher all the way to these highs. If anything changes, I may change my mind regarding this, regarding taking profit. But for now, this is how I'm going to trade EUR-USD on the 4 hours time frame. I don't even need to go to the lower time frame, because 4 hours chart already looks good enough in my opinion, right? Considering the fact that the dollar is getting weaker right now. So moving on, we're going to be talking about USD-JPY. So USD-JPY, I've been talking about this for a while, and we seem to have had a retest of this trend line. So this is has been a bullish trend, and now we fell below this area of value, took out this trend line, and now we seem to have had a retest. So I'm simply going to wait for more price action, possibly a consolidation and a move to the downside. My entry is going to be around the break of these lows, possibly, right? So my entry is going to be around the break of these lows. I'm going to zoom in a little so you can see what I'm talking about. So we have a clear lows here, right? So if price comes here, forms a base and takes out that base, then I'm going to go short underneath these price levels. Stop loss is going to be above these highs, and my take profit target is going to be around these lows. So first take profit target, obviously here. Second take profit target, obviously here. Third take profit target around these lows. So this is how I'm going to trade USD-JPY. So if you take a measured movement from your entry, total take profit target is going to be around 1,500 pips, right? So this is USD-JPY for you, and I think this is logical and it's possible. To put this into perspective, let's take a measured move from here. So from these highs all the way down to this price level, this is 2,000 pips movement. So there's a good chance we get a 1,000 pip drop all the way to these lows, which is a no-brainer in my opinion. So this is how I'm going to trade USD-JPY. Meanwhile, any of these levels in which you decide to take the whole of your profits, you're still going to be in decent profit. But overall, I don't see any reason why you want to buy USD-JPY right now. All I see is a sell trade opportunity, and I'm going to go long for those trading USD-JPY. So for me, I wouldn't be trading USD-JPY because trading one currency pair is enough for me, because I trade gold. I'm already on a gold trade, so I won't be opening any more positions on gold. But I'm going to take the Nasdaq trade and I'm going to take the EUR-USD trade, which would be good enough for me this week if everything goes as planned. So that's it briefly for USD-JPY. If you have questions, leave your questions in the comment section down below, or join our Discord using the link in the description below to put in your question with our community. So lastly, we're going to be talking about US500. This is the S&P 500. The only reason why I decided to talk about this chart is because it looks similar to what we have on Nasdaq, right? So remember, Nasdaq had this trend line, something similar. We broke out from trend line, and now we seem to be trading around a significant area of resistance. So similar to what we'll be watching out for on Nasdaq, going out to the 1 hour time frame, for example, I'm simply going to see if price takes out. So as you can see, I also have an alert set here. So if we get a breakout from this area of resistance, so let's say we get a breakout from this area of resistance, market opens, we get this breakout, then I'm going to go long. So if I go long over here, for example, where I have my alerts, my stop loss is going to be around these lows. Best logical price positions to set your stop loss in case we do get a reversal to the downside. Meanwhile, you could also set your stop loss. If you want a tighter stop loss, you could put your stop loss the moment we break out from this trend line. So a reversal to the downside, breaking down below this trend line, already seems like we are going to reverse or we're going to go down, right? So that could also be a potential price level to set the stop loss. Why take profit target is going to be around these highs, and if you take a measured movement, that will be around 1,000 pips possibly, right? So over here to this price level, so 1,000 pips movement would be a decent trade opportunity if you're able to catch this. So for a bearish case scenario, similar to what I explained on Nasdaq, you want to watch out for something like this. So price maybe moving down like this and taking out this trend line. But for US 500, I may not be waiting for price to take out these lows, because that would mean stop loss of approximately, let's see, 700 pips, which is just a lot in my opinion for a trade like this. So instead of trading US 500, I may just stick with trading Nasdaq, though they are the same charts likely, right? So that's it briefly for this week's analysis. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you have questions, use the comment section down below. And if you're not part of our Discord community yet, please use the link in the description below to join our Discord. And lastly, if you're interested in learning to trade Forex like a professional, that course is going to help you a lot. Use the link in our description below to get access to our course right now. It's very affordable, and you get to ask all the questions you want in the world, and I'll answer you as soon as I can. So that's it from me this week, guys. See you next week.